although that's kind of hard to see. Let me go a little bit bigger. Okay. Carl and Karina file a joint return. Karina earned a salary of $38,000 and received dividends of $3,000, taxable interest income of $2,000, non-taxable interest of $1,000. Carl received $9,000 of Social Security benefits and a gift of $6,000 from his brother. Okay, so scratch the gift. That's not taxable. We're not gonna, remember, gifts are not, they're not taxable to the recipient. So we're not gonna worry about that. Salary though, we do wanna know. Dividends of $3,000, taxable interest income of $2,000, and non-taxable interest of $1,000, and then $9,000 of Social Security benefits. All right, so let's get to our provisional income. Here, so we got our salary, $38,000, that counts. Dividends of $3,000, taxable interest income of $1,000. Now at this point, I'm sorry, $2,000. This is everything that would be included in our adjusted gross income at this point, right? We don't want to include our Social Security benefits in this calculation because we would just have to take them out again, right? So let's get to our, we are going to have to include 50% of them, but let's do this preliminary calculation first because we're also going to have to add back. So right now we're just looking at our AGI before Social Security. All right, so 43,000 is our AGI before Social Security. Now we're gonna have to add in $1,000 of our non-taxable interest and 50%, that's a 50, of Social Security benefits, so $4,500 to get to our provisional income. Okay, so 48,500. Here's our provisional income.
So whether you add in the dividends or take them out, is the keyword qualified?
Dividends are always going to be included. It's the interest income that is part of that you're going to take out. If it's well, no, I shouldn't say that. Interest income, non-taxable interest income is going to be added in, but dividend income is going to be added, is going to be part of the calculation.
Okay.
So if you just think about the tax form and what you get, what you arrive at for AGI, those dividends would be included in that.
Yeah, I was reading over problem number 3, it says like qualified dividends of this, this, and this, and I was reading that like lesson again, and it didn't make a ton of sense to me, but I got the right answers.
Okay.
Taking out so I must have just been in the same tax bracket,
Yeah,
but it didn't affect anything.
Yeah, I think so our dividend income conversation is different from our Social Security benefits conversation, because those dividends, it does matter if it's qualified or not with regard to how they're taxed, the dividends themselves.
Right.
But it doesn't matter as far as Social Security.
Yeah,
is
so
concerned.
never take them out.
Yeah.
Only if they're, okay.
The only thing you're gonna remove is that non-taxable, or actually, the only thing you're gonna add back is the non-taxable
Right, okay.
interest.
I had initially deducted that 3,000 for the dividends, so I was on the wrong path anyway. So.
Okay.
Okay.
Okay, so, and then we're going to use this 48,500 to go to the next step, which I don't remember off the top of my head what that calculation is. So I gotta look back here. Yeah, so if you look on, look at that on page 3-11, it will tell you what that calculation is. Adjusted gross income before social security benefits, here, and then add back tax exempt interest, and add back, and then those other items as well, and then 50% of social security benefits. 48.5. Alright, so they are married, filing jointly, and the upper limit is 44,000. So our upper limit is 44,000, which means that the taxable portion is the lesser of 85% of benefits, so part A, 85% of benefits, or B, the excess of provisional income over 44,000 plus, so 48,500 minus 44,000, which is 4,500, plus the lesser of 6,000 or 50% of benefits, 4,500. Oops. Okay, so that's the lesser of those two, so this is 9,000. What's 85% of benefits? So our benefits are 9,000 times 85%.
7,650.
Alright, so 7,650 or 9,000, we're gonna take whichever is less of that. 7,650. Is that right? Somebody's gonna tell me I'm wrong?
Oh, I haven't tried it yet.
I'll try it.
I was just making
I
sure I had
really-
my notes.
I can get more, check my works, you guys can't. Oh, accepted one. Yeah. There we go. Make sense? I know, it makes sense when I do it. When you get back, like,
I don't remember what I was doing.
I'm recording it.
Thank you.
Yeah, you're welcome. Other questions?
Extra credit.
Extra credit?
Yeah.
Oh, man. Which one?
6B. Schedule 6B. P.
Six, which one?
6P.
Oh, on Schedule B?
No. 7.
Oh, line 6?
Yeah, 96.
Oh, these are our taxable, so it's the same calculation, right? 6B. So what you'll have to do is, well, I'll get to the provisional income part here, and then you can do the rest, okay? So we've got, so these are the social security benefits. So we're not gonna include that in our provisional income. These are social security benefits, we're not gonna include that. And then they've got interest income here. So we do need to include that, so let's. Alright, so we've got 9105. And we've got 7565. I think that's all, other than the social security, that's all we have, right? Alright, so our AGI before social security. 16,607. We don't have any non-taxable interest here, we don't have to worry about that one in this one. But we do have to take 50% of our social security benefits, so. Social security was what, 21,600 and 15,600? So 200, 5, 6, 7. What's that, 37,200? Now we divide that by 2, which is, what's 37,200 divided by 2? How much, 18? What? 6? Okay, so 18,600, so we gotta add that in, 18,600 to get to our provisional income. So, that's 76,2, 6, 7, 5, 35,270. Alright, so 35,270, they're married filing jointly, so we go back to our chart, and we use our chart. So 35,270 is between, so you would use the instructions for between 32,000 and 44,000. The second part of the calculation. So now you gotta go over here and compare. So provisional income is 35,270, which falls between 32,000 and 44,000. Now it's gonna be the lesser of 50% of benefits or 50% of the excess over 32,000. So 50% of benefits is the first choice. We've already done that, 18,600. Or B, 50% of the excess over provisional income. Alright, so 35,270, my excess of provisional income, sorry, over 32,000. $3,270 and then 50% of that, right? 50%. So what is that? 1,500. What's half of 3,270? 1,635. So we compare this and this, whichever is less, that's what it is. You gotta use that chart. Yeah. I can't do it without looking at the chart. All right, we got 3 minutes. Any other questions? All right, we'll probably have some time on Thursday too.